What's the market opportunity for new Unity Small Finance Bank? The RBI had already given an in principle approval to Centrum Financial Services to set up a small finance bank and along with Bharat Pay. The Reserve Bank of India Tuesday issued a small finance bank license to a consortium of fintech companies Bharat Pay and Centrum Financial Services Limited. The new business entity Unity Small Finance Bank will see Centrum's MSME and microfinance business merged into itself. What went behind the setting up of this SFB? The RBI has already given an in principle approval to Centrum Financial Services to set up a small finance bank along with Bharat Pay. It took over the Punjab and Maharashtra Cooperative Bank, the assets and liabilities of which will be taken over by the new entity. Both Centrum and Bharat Pay had aspirations to evolve their business into a bank, and coming together of both the part companies alongside the PMC bank crisis presented an opportunity for the two entities to join hands. What does this mean for the two companies? In a statement, Centrum Group's executive chairman Jaspal Bindra said, "We aspire to be India's first digital bank." This sheds light on the need for traditional lenders to expand their digital infrastructure in order to address the market's requirement for digital products. There have been several examples of small finance banks and non banking financial companies collaborating with fintech companies to assess and monetize the data collected by these consumer tech firms. This has particularly gained momentum in the buy now pay later BNPL and the micro lending models where the companies like Paytm, Google Pay, Amazon Pay, etc. have partnered with NBFCs to assess credit worthiness of an existing customer and present it to the lender as a potential borrower. For Bharat Pay, on the other hand, an SFB license means it could expand its leading portfolio. The startup already processes around 4 billion worth of transactions on its platform annually, and it has been planning to offer its customers, primarily comprising small and medium-sized merchants, a bank account and lending services based on their transaction. Is there a market opportunity for these services? Sectoral analysts have pointed out that in the current scenario, where cost of borrowing is low, there is an addressable market of small and micro borrowers that typically take loans at higher than market rates. Also, this segment of borrowers are usually not targeted by larger private and state owned banks for loans given the small ticket size. Even though for small finance banks at the rate of deposits could be higher, considering the need for customer acquisition, thereby impacting their net interest margin. The lending rates they offer could still be attractive for small merchants across the country looking to borrow to fulfill their working capital needs. This segment is also being targeted by BNPL companies. In India, there are several BNPL wallets that are prevalent on e-commerce, grocery and food delivery platforms. These include PayU, Run, Legy, Pay, Simple, Just Money, Amazon Pay, Paytm, Postpaid, in addition to several pay later services being offered by banks such as ICICI Bank, etc. Goldman Sachs has predicted that BNPL will rise to become the fastest growing online payment option, with its market share growing from 3% now to 9% in 2024. Thank you.